Are live. Welcome back, everybody, to another show. We've got another special guest coming on to do some more market analysis with us. Today, we have Dimitri, aka One Spruce, on with us here on the show. What's up, Dimitri? How you doing?
What's going on?
Not a lot. So, yeah, I figured reach out on Instagram and we could just jump onto a call. And I wanted to give people just a chance to meet you and to get some analysis from you. Before we jump into the analysis part, though, can you just tell me a little bit about you and you as a trader, like how you got started and your trading style?
Yeah, so I just graduated college. I've been trading for about 4 to 5 years. Really needing another means of income. Um, being able to, trade and make your own money comfortably was the best thing for me. I've had over like 8 jobs. So me being able to, make that step and make that risk and to learn the actual skill was definitely good, I would say. As far as trading, I had a lot of pitfalls. I've joined a lot of companies. I've had a lot of mentors, but I really didn't get to really learn until, I sat down and by myself in my room, locked myself in my room and actually studied, candlesticks, price action, and things in that nature.
Gotcha.
That's how I got, pretty good at it, I would say. But yeah, that's pretty much it as far as like being in college. I just graduated, so I'm trying to figure out what I want to do. As far as me having enough equity to trade full time as well, so
Sure.
making that leap.
Sure, and that's a great point because it does take money to make money, and it's in the meantime, like I got a software job right out of college and saved up money for a while before I was able to actually see like gains that really meant a lot. But it is a skill that it's a long-term skill that you use for life. So happy to have you on the show. What I'm going to do here is we've got your screen. We can change the view so that your screen is on the screen, and then I will back out and give you the floor to just go through some charts and analysis if that's cool.
Okay, no problem.
All right, man. Well, I'll be back with you. Let's say 30 minutes.
Yeah, that's fine.
Perfect. All right. Good luck with it. We'll be behind the scenes.
Okay. Okay. So the basis of my strategy, I have a trading plan. So what my trading plan states is that, as far as the strategy, I trade off of, basic price action, supply and demand zones. I do identify certain candlesticks as well. But as far as just the base of it, going with the trend, supply and demand, basic price actions, double bottoms, double tops, higher lows, lower highs, things in that nature. But the candlesticks that I identify is what I call, are what I call institutional or mitigation candles, right? So I identify these candles when you have bearish pressure, right? And then you have one bullish candlesticks where I feel like the banks buy to fake people out to sell the market again, right? I believe that these candlesticks have to be hit again. These candlesticks are candlesticks that I look for when it comes to identifying new demand and new supply zones. As far as the gold outlook, so I caught this trade right here, right at this bottom. And I'm just giving you just an idea of, what my strategy is. So I caught this trade as of right here, right? My trading plan states that if I catch the initial rejection off of a big demand zone, right, I am able to take my profits for 50 to 100 pips, right? So let's say, for instance, say if I were to catch this bearish move at this demand zone, right, I could take my profits. Obviously, this is on a daily time frame, so this is going to be 50 to 100 pips within this bullish candlestick. But, I would be able to take my profits 50 to 100 pips off the first initial rejection. My trading plan also states that's written on paper that if I my second initial movement or initial rejection, I would say, double bottom, double top, higher lows or lower highs, I am able to swing those trades for more than 100 pips. So putting that to perspective, if I catch this initial entry right here, I wouldn't swing this entry. I would wait for the confirmation, right? Whether it's a higher low or double bottom to enter this trade. I entered this gold trade right at the bottom at around 1681, right? And I was swinging this trade because that's what my trading plan tells me to do. So, you know, I was up about 400 pips, which this is on the daily, so it's going to be a bigger type of perspective, I would say. So I'm swinging this trade. You know, I take my profits at around 400 pips, and I identify this candlestick right here, right, which is an institutional mitigation candle. I feel like the banks have to come back and smack the candlestick before another move to the upside. So say if I were to put a line right here, and I would put a line in the middle of the candlestick, that's what I would look for as far as a break and as far as a retest for another push to the upside, where price did come and break and then retest, and price did push and it hasn't stopped pushing yet. So that's really what I identify. You know, I do use, you know, strictly price action, but I do use, you know, the 200 period moving average just to see where price is at as well. So that's a little bit about, you know, the basics, I would say. Another example for GJ, say if I were to go to the 30-minute time frame on GJ, right? Seeing that GJ is already on an uptrend, I would want to go with the trend for GJ. I want to go with the trend because GJ hasn't stopped its bull run. So since I'm going with the trend, one of the entries that I did catch is this entry right here. And you might wonder, you know, why did you catch this entry right here at this bottom, right? Why did you catch this entry at this bottom? Because if you zoom out, if you go to the left right here, this is what you call an institutional mitigation candle, right? So you have bullish pressure. You got the bank sold to manipulate everybody to buy back again. They still have this order open, right? So they want to come back and get the money for that order for pretty much manipulating people. So if you scroll to the left, price made its first bottom. I would have entered off of the second bottom for an extra confirmation that price is not going to continue to go down past this institutional candle. And I entered with a couple lot sizes. And I took my profits at about, I think, yeah, about 90 pips, I would say. So, you know, a couple things that I actually identify on the chart. So we can go through random, I would say, pairs just to get a basis of how I would look at a chart live. So AUD USD is range bound. So I don't really like to trade in ranges, but if you are going to trade in ranges, I recommend you not trade in the middle of the range. I recommend you trading at the demand or supply zones. I'm more of a trend trader, so I kind of like to catch the retracement and the impulse to the upside, to ride the impulse up. So AUD USD is range bound, so I wouldn't necessarily enter this trade as of right now. I would look to see where the trade is and how it's reacting off of this demand zone as of right here. I also know that 200 period moving average is under. So as long as it's over the 200 period moving average, I'm still bullish. And also the bulls have been in control since March of 2020. So I wouldn't want to trade against the bulls in this type of situation. So Euro AUD. Let's say if we go to the, let's say a 4 hour for Euro AUD, right? So Euro AUD has been pretty bullish so far. You know, it's been making higher lows, so I want to go with the trend all the time with, you know, the higher lows. It kind of got stagnant in this area, right? So this is when I would have entered this trade, right? So this is a higher low. This is another higher low, right? This low is testing this candlestick. The reason why price wasn't able to go past this initial level is because this candlestick is kind of making price stagnant, right? So when price came back down to retest this candlestick, this is not a this is not the move that I would have actually held this trade. I would have probably entered around this candlestick or this candlestick, I would say, for a bull type of move for about 87 pips, right? Price has been consolidating in this range, but also I did enter this trade live as well. So we got another rejection off of the demand zone, right? And then it made a little higher low right here. So I did enter this higher low because my trading plan states that if I were to enter a higher low, then I would be able to swing the actual trade for 100 pips plus. So I'm actually still in this trade as we speak, right, as of right now. Perfect example as far as an institutional candlestick would be Nas 100. And this trading strategy, it works on all, I would say, all time frames. So this is a perfect example of an institutional candlestick right here, right? You have the double bottom, right? So just going step by step and explaining pretty much my thought process, right? So, you know, you have the banks sold to buy, right? This candlestick is what I'm looking at, right? This is the last sale candlestick before the initial bull move or the bull run on Nas 100, right? So, you know, I identified that candlestick. When price came back down, when the banks closed their orders, right? I would have entered this trade, but I wouldn't necessarily held this trade until price gave that extra confirmation down here, right? When it gave the extra confirmation down here, that is when I actually entered and held the trade. So if I would have entered and held the trade, I would still be, you know, holding it right now. I did take profit on the trade because I was comfortable with profits as far as my trading plan, but you know, that's when you would have entered to hold the trade. And then the bank sold to buy again. So what I'm looking for, or what I was looking for, was another institutional candlestick. So this candlestick was what I was looking for. We see that this is a new demand zone. So price reacted perfectly off of that zone, wick straight off of the actual level of structure. And, you know, price is making his way back up. So that's a perfect example of, you know, how important I would say institutional or mitigation candle is, as far as the markets, no matter what type of no matter what type of pair you trade, no matter what type of subject you trade, as far as indices, commodities, you know, Forex, things in that nature. You know, I feel like this strategy is always going to work, and it's going to help you not get into a lot of dumb entries, I would say. You know, I only trade about 1 to 2 trades a day. I only risk 1% every trade, 2% a day max. I always keep my risk to reward ratio over a 2 to 1, just in case I have a losing week or a losing month, making sure that I'm always winning double the amount that I'm losing, even though my win rate is higher than 50%, making sure that I'm always in profit, I would say. So just that in general. ADCAD. So it's been descending since April, right? AUD CAD, if we look at it on the weekly, because I am a swing / intraday trader. I don't really scout like that. So say if I'm looking at AUD CAD as of right now, things that I would identify is, basic supply and demand zones, which this is a demand zone. You have certain candlesticks that I would identify, which is this candlestick and this candlestick right here, right? And what I would see is, all right, AUD CAD is falling right now, so one of two things can happen. It could either make a sharp impulse down and then wick up, right? And you could possibly catch a bullish engulfing candlestick to enter to TP right here at about 94,675 at this institutional candle before the reverse. Or if price were to continue to go down, right, you could catch a move like this right here. So really identifying the candlesticks and, paying attention to the candlesticks as well is very, very important as far as my strategy, because at the end of the day, you never know what price is going to do. You only make an educated guess on what price is going to do. So say, for instance, hypothetically speaking, if price were to wick up right here, right? And say if price were to, instead of bearish, turn bullish at this big, huge demand zone, right? And say if price were to turn bullish and then close as far as right here, then what I would be looking for, I'll be looking for the break in the small retest for that move back to this institutional candlestick on the weekly. Right, I tend to hold my trades even in drawdown because I'm okay with, risking a certain amount of money and things in that nature. As far as pairs go, we can go through random pairs, I guess. What is this? GA. Okay, yeah, GA. So let's talk about GA. So if we look at it on a weekly type of perspective, since March of 2020, it's been on a decline, but it's starting to, bulls are starting to take control. It's starting to actually rally up. So from January, from the beginning of the year, price has been sort of bullish, right? So what I would have did is I probably would have went with the bulls just because I'm not really looking so far back as the weekly as much as the daily, I would say. So I will already have a buy bias, right? I'm seeing higher lows. You got a low, you got a higher low right here, you got a higher low, you got a higher low right here, right? I see a roof, what I call a roof. So I see price breaking in ATH. Not all-time high, but a high, a daily high, right? So if I see price breaking the ATH, this is a perfect example of waiting for that extra confirmation, right? If I see price breaking this high, I can either catch the retest. I could catch the retest right here, right? And potentially make, 200 pips. But this is the perfect example of waiting for that extra confirmation for a bigger and better move. So this would be a double bottom right here, right? This will be the first retest. For my trading plan states that I swing the second retest. So if the retest comes and it comes back the second time, then this is where I would have entered this trade, around right here, right? And the trade is up about 177 pips right now, but I'm more comfortable swinging those type of positions, right? I'm more comfortable swinging those type of positions for a bigger type of gain, given that, price is, as far as back testing, given that price, rallies better, I would say. So like I said, this could be an example as well for GA. As well for GA. You have a low right here. You have lower lows, right? You have its lowest low, right? And then you have price retesting this low and actually being able to rally up, right? So if you would have entered this first initial position at this low, right, you could have made good amount of money. But as far as swinging the position, the swing didn't happen until the second initial retest, right? So once the retest happened, again for the second time, right, and came back to our initial positions, and the retest could be double bottoms, double tops, higher lows, or lower highs. But the initial retest right here, you could have swung it for more of a positive gain and a bigger amounts of money added to your account, realistically, right? So, I can give you a ton of examples, right? So you have a level. I would say this will be a new supply because price will break it and retest right here, right? So you have a new level right here, right? You have price shooting down. You have price coming back up right here, right? Yes, you can enter off of this initial rejection, but this is the rejection that you want to enter off of, or this lower high, right? You can enter either the double top, double bottom, higher, lower high to actually swing the trade. So this is the rejection that I would have entered, right? For a profit, for a bigger amounts of profit. So if I would have entered the first initial rejection, you could have made those amount of pips. But if you would have entered the second one, your pip count will be bigger, right? Same for right here. Say, coming back up to this supply type of zone / level, right? Being able to react. You can catch the first initial move, but I wouldn't swing the move unless I catch the second one, right? For an extra confirmation. So if I would have catch the second one, you could have got a bigger return. And I can go back and forth. It works on every single pair, I would say. We can go to GU. So for GU, right, we have price, was at its high right here, right? And then what happened is people could have entered this, I would say, trade off of this bearish engulfing candlestick, right? You could have made decent profits off of this, right? But if I were to swing a trade, speaking from what I know as far as, back testing in my trading plan, I wouldn't swing the trade until price came back up and came right about up here to the point where I could be able to swing the trade. Also looking at DXY as well. DXY is in a liquidity pool, I would say. So DXY is in a liquidity pool. You have this huge liquidity pool, money being grabbed in here, right? DXY is shooting up because if DXY were to shoot below and through this liquidity pool, that means that, GU, EU, AU, NU, gold, Bitcoin, all the cryptos, all of those type of sectors would actually shoot up if DXY potentially shoots down below this liquidity pool. So the banks have not been trying to let DXY shoot past this liquidity pool, only for the simple fact that that'll be easy money for us as traders. But going based off of my strategy again, that's what I would have entered. I would have entered this sell right here. While DXY was low and at a demand zone, I would have entered this sell at a high point, right? Just off of raw eye, right? Just talking about my strategy again, let's say if price, let's say we can talk about these two levels right here, right? So we have a low, we have the wick off the 200 period moving average, which I love those type of wicks because it gives you good rejection, right? So let's say, hypothetically speaking, if price was right here, right? And let's say a price, if we got a move to the upside, right? Let's say we got a retest right here. Let's say if we got a retest right there. Would I trade this first retest to get this profit right here? I wouldn't. Well, I would to get quick profit, I would say, my fault. But as far as me swinging the trade and holding the trade, I would catch that second retest to swing and to hold the trade, right? Same thing right here. Say if we got this bullish movement, we have a sharp retest, right? I wouldn't enter this first initial one. I will enter this second initial one right here, right? If I wanted to swing on a swing trade type of perspective, because I think that's the best way to trade anyways. On a swing trade type perspective, having that second retest for another bull run all the way to the top. So that's pretty much the basis on how I trade, identifying institutional mitigation candles and things of that nature. We can go through pairs to try to see something live. Okay, so NZD CAD is under the 200 period moving average. So I wouldn't be looking for a bull type of perspective as of right now, given that it's strong bearish power to the downside. If we look at GBP pairs right now, let's see if we can, before the time is up, let's see if we can catch an entry. Okay, I'm going to leave that alone because that'll be in the middle of a move. But as you can see how these institutional candles are so impactful, I would say. Identifying them, they're very obvious, seeing the only red candlestick out of a huge bullish impulse is going to be very obvious. So just identifying, not really, necessarily basing your strategy off of it, but just identifying them and actually, trading them as if, all right, I know that it's there, so I have to watch to see what price is going to do. I feel like you're going to make a lot of money, identifying those certain type of candlesticks, because all of this is that what I see as far as this is just a bullish impulse, and this is just a rejection off of the bullish impulse because I'm bullish on GJ anyway. So just being able to try to catch a re-entry. Even if you wanted me to talk about crypto and things in that nature, only one or two things will happen on crypto. Is it's squeezing. I told my team that crypto at this point could have either dropped back to $30,000, or you could have got a run. If the bulls had enough power, you could have been able to catch an entry right here at this a new demand zone. And what I teach my team something called waves. So if you have a downward trend, right? When price breaks the trend, we don't necessarily trade off of the trend line, catching the retest off the trend line. We trade off of catching the retest at the near structural level for more of a confirmation entry, right? So I wouldn't have told my team, say if we were day trading Bitcoin, I wouldn't have told my team to, buy Bitcoin at 36,714. I would have told them to catch this retest at this new demand zone, previous supply zone when it broke and it retested. If I were to zoom in right here on the hourly, catching this retest for a 50 pip move. Bitcoin, the pip count is kind of different, but 50 pips worth of a move as of right here, because I wouldn't swing it unless it comes back down and it retests it again. So that's just the basis on my strategy or whatnot. But yeah, I think my time is up at 11:30. But if anybody has any questions, you can always DM me on Instagram at #1 in Spruce about my strategy. Also starting a YouTube called Rockstar Spruce. If you guys want to subscribe for, markups, potential entries, real authentic lifestyle type of things as well. So, coming
All
from
right, Dimitri. Good stuff, man. Thanks for the analysis.
Yeah, no problem.
I enjoyed having you on, and it looks like some other people did as well. So thanks so much for coming on, man. I like your a lot of people, they either have it all black on their charts. Some people have it all white. I like how you've got the mix. I like the black and the white. It makes a nice little contrast there.
I appreciate it. Yeah, I kind of trade better with the black in the background.
I got you. Yeah, it's cool. I like it. Well, hey man, again, thanks so much for coming on. Thanks for your tips. I like the institutional trading sort of concepts. That was cool to watch. And it's always cool just to have new people on because everybody has a unique style. So thank you very much, Dimitri, for coming on. I tagged you on Instagram, so feel free to check that out afterwards. And maybe we'll see you back next time.
Oh yeah, always.
All right, guys. Well, with that said, thanks so much, Dimitri, for coming on the show. Awesome to have him, and a big shout out to him. You guys can find him on Instagram at at One Spruce. I'm so used to the A1 now. It's One Spruce on Instagram. Go give him a follow, you guys. He was awesome to have on here. We had like 35 people in here. So if you guys go check him out on Instagram, like I said, he's got some good content that you can check out for yourself. Like I said, he reached out to me and I checked out some of his content. I was like, man, this is pretty cool. So we'll have him maybe back on the show again in the future. With that said, you guys, like I said, go give him a follow at One Spruce on the old YouTube channel. I'm going to actually on the Instagram. I mean, let me look at One Spruce. I just put it in the chat if you guys want to go find him on Instagram. So check that out. With that said, you guys, I'm going to wrap it up here. We've got a show this afternoon, but for now we're taking a break and we will be back with you soon. Thanks so much for watching, guys.